So hello guys, welcome back to my trade recap for gold, and we are going to be starting our trade recap from 9th June 2025. That's on Monday. And without further ado, let's go straight into the chart.
And then you're going to win.
If you are experiencing a losing season right now, understand that there's a winning.
So first and foremost, my first trade was on the 15 minutes time frame. My first trade was on the 15 minutes time frame, and I would love to explain it on the 15 minutes time frame. So without wasting our times, first and foremost, I actually had some complete rule based on my trading trading plan. So the first rule was my break of structure. I have a break of structure. Second rule was my order block. This is my order block. Third rule was my inducement. This is my inducement. And what is my fourth rule? Imbalance, which we still have an imbalance, but it's mitigated already. And irrespective, this is my entry. But the market came, spikes us out of the trade and came into our zone immediately. Can you see? If I wasn't spiked out, this trade would have hit TP. So that is how we actually lost the first trade on Monday. And irrespective, we followed our rule, but the market did not respect our rules. So irrespective, we're going back to the 5 minutes time frame for the second trade. So this is the second trade now. My confluence for this second trade is very simple. Double engulfing candle, guys. This is it here. This is my double engulfing candle, and I have liquidity. I don't just enter any trade because I see double engulfing candle. If I see double engulfing candle, I need to see a liquidity before I enter the market. If there is no liquidity resting around that double engulfing candle, I am not taking the trade. The liquidity is one of the most important thing I always look at. Always. If there is no liquidity, I am not taking the trade. So irrespective, this is my double engulfing candle. That's the V pattern on the line chart. This is my double engulfing candle, rule number one. And this is my liquidity, most important thing. And that liquidity, immediately I saw the liquidity, I said, yes, this is my resistance for sure, and I am going to take this trade. Irrespective, the market came, tapped me in, take out the liquidity, tapped me in, and started going our way immediately. And why I took TP here was because we have another double engulfing as our resistance on the higher time frame here. And what did the market do when it came? Give us our TP and immediately started reversing. So my second my third trade for that Monday, and this particular trade, we rallied it is on a 5:1 RR. We rallied it from this particular zone to this particular zone. Like I said, I will be dropping videos around this particular video to see the recap of how the trade actually went. So the third trade was also a V shape. That's the double engulfing candle. But irrespective, this double engulfing candle did not give us clear liquidity. That's why the moment I entered the market, I saw a little bit of reaction. And you see, the market came, tapped me in, saw little of reaction. The moment I saw this reaction, I brought my SL. I broke the market. I broke even in this particular market, and irrespective, the moment I broke even, the market came, tapped me out, and irrespective started going its way. That's the market for us. So irrespective, it was a break even on this particular trade, and that's how we lost the third trade on Monday. So for Tuesday. So I have confluence with my psychological level on Tuesday.
Doing what I love every day. Like, I don't bother with nobody. You don't know me. You don't know where I done been.
Now on the first 30 minutes time frame, this particular trade was giving me a nice confluence on the 30 minutes time frame. So let's go to the 30 minutes time frame. I like doing nice analysis that would actually be understood even by a beginner. So that's why I love analyzing my trades. So on the 30 minutes time frame, like I always told you guys, I only mark body candles. And what I saw here was a break of this particular order block. Can you see? This particular order block was broken. But if I had seen this earlier, that's why I like reviewing my trades. If I had seen this earlier, I would have known that this body candle is not valid. It's supposed to be valid both the body candle and the wick, because the wicks are both bigger than the body candle. Can you see? The wicks are more bigger than the body candle, and in this particular scenario, you make sure you mark everything. But irrespective, I wasn't that active to see this particular mistake. But irrespective, when the market came, can you see, tapped me in and took us out of this particular order block just to retest our psychological level. And my main confluence was together with this psychological level. And irrespective, when I saw that break and retest for 30 minutes, I went back to my 5 minutes time frame to see a retest of that particular 30 minutes breaker order block. We were waiting for a retest of that particular 30 minutes order block, and irrespective what happened in the market, irrespective, the market came, broke this at particular 30 minutes candle. Can you see? If it is well placed, my entry was supposed to be on this particular zone. But because I was expecting that the market was not supposed to go to this particular zone, I expected that the market was going to just come, retest this particular 30 minutes breaker block, and started going up immediately. So irrespective, that did not happen. But my SL was below this my what do they call it, my psychological level. So it didn't result to an SL. The market just kept consolidating almost at my stop loss, and irrespective, we saw an impulsive move, and I took profit out of this trade. So this particular trade, I actually caught a 2:1 RR. Very sure of that. I caught 2:1 RR. So that's how I actually smashed this particular trade. It wasn't a BE. It was a TP. So irrespective, this is a TP for me. But when the market started consolidating, I wanted to get out of the market to just minimize my loss, But irrespective, I saw more reasons why the market is still supposed to go up. So that's it for this particular trade for Tuesday. That's the first trade for Tuesday. The second trade for Wednesday, Tuesday, it's on the 5 minutes time frame. Now let's look at the confluences around this particular trade. First and foremost, we have an order block. Can you see the sell that created all these buys? Now my body candle, I only mark body candle, but irrespective, what I looked at was liquidity. Can you see? I have liquidity here already. So my first confluence was my order block first. No, let's do it like this. My first confluence was my break of structure. Can you see it here? I have a break of structure here. My second confluence was my order block. My third confluence was this particular liquidity here. Can you see the liquidity? Very visible. This particular liquidity here is very visible. Let's take this out. This particular liquidity here. And what did the market do? The market came, tapped into only the wick, did not even come for my body candle. But because of spread, you see, that is why most of the time when you are trading gold, always think about your spread. That spread now is between you and your broker. If you understand your broker and you know the measurement of their spread, when you are trying to enter a trade, or maybe you're using sell limit or buy limit, you put an extra at least 2 or 3 pips ahead of those spreads, so that anytime the market comes in, it could actually tap you into the market and move together with you, or else you would actually be having several missed trades. So irrespective, my entry was around this liquidity area here, this liquidity pool, and when the market came, tapped me in and did give us little reaction before going into TP. So that is how we actually rallied this trade from this particular zone to this zone, and it gave us a 6:1 RR. So that is it for the second trade. So for the third trade, we have several confluence for the third trade, and I think we have this confluence on the 15 minutes time frame. Let's go to the 15 minutes time frame and have idea of how we caught this trade. Okay, so irrespective, after we caught these two trades for Tuesday, the third trade was this particular confluence. Now we have an order block here, as you can see. Can you see? We have an order block here. Now what do? Bully body candle. I marked my body candle, and I knew that the market was going to come to retest this particular resistance, this particular support, sorry, because this is also a support. If it is on the higher time frame, anybody that sees this formation would know that this is a support level. So irrespective, people would say it's actually another block, but I would call it a support level because this is an immediate buy and an immediate sell and an immediate buy, immediate sell and an immediate buy. And what are we looking at here? We are looking at to mark the open and close of that particular candle. So irrespective, even if I mark this particular zone, even if I mark this zone as my entry, I will still be on the good side. Even if I mark this zone as my entry, I will still be on the good side. But irrespective, I marked the closure of this particular sales, and when the market came, tapped us into this close and give us immediate reaction. That is, for this particular trade, we got a 4:1 RR, and this is, we actually caught this trade from this particular zone to this zone, and that is how we actually caught the third trade for Tuesday. So for the fourth trade, we're going to go to the 5 minutes time frame to see how that particular fourth trade actually played out. So let's go. So for this particular trade, we use fib level to enter this particular trade. So now how did I knew that the fib level would actually hold? We were waiting for pullback. So the moment I saw that market at that particular zone, what did I do immediately? I marked my fib level from the top of that particular zone to this bottom of this zone. And irrespective, what did the market do? Can you see the market reversed at the 0.618 level? What did the market do? It reversed immediately, and that is how I actually caught this particular trade. Also on the 5 minutes time frame fib level, and that trade we actually caught a 3:1 RR for that particular trade. So on Tuesday we actually caught 1, 2, 3, 4 trades, and we all ended up in TPs. So we've already recovered from the Monday loss, and we were able to actually end the week and the day, that's Tuesday, in profits. So on Wednesday I didn't see any clear setup. This is part of trading. You don't have to see your setup every day. The moment you start seeing your setup every day, you need to start getting scared of yourself. Yes, because you are going to destruct yourself. You need to start getting scared of yourself. So irrespective, I didn't see any setup on Wednesday. And you see, these are all the price action for Wednesday. And going back to Thursday, I think I saw several trades on Thursday. Yes, I saw several trades on Thursday. And on Thursday, I only traded on New York session. The Monday and the London session was just a trade that I actually caught, and it was on 15 minutes time frame. So this is Thursday. That's 12th of June 2025, and we will be going to our 15 minutes time frame to see how we actually caught that particular trade. Yeah, was it a 15 minutes time frame or the 30 minutes time frame? Let me have a check. Or I think it's the 15 minutes time frame. So it's the 15 minutes time frame. We caught it on the 15 minutes time frame. Now this particular trade is a little bit trickish. But let's go to, I want to have an idea, sorry. Let's go to the 1 hour time frame. Yes, we caught it on the 15 minutes time frame. We use a breaker to actually enter that trade. That's a mitigation block. That is what we use to enter this trade. and I would actually be giving you conferences that I actually always also use. I used to tell people go to gold, go and look at your reaction zones. Your reaction zones are going to give you better confluence of why all these things are happening. Why all these things are happening. So first and foremost, when I came into the market in the morning, I saw several confluence, and this trade was a trade of London session, that's London Open. So irrespective, um, I saw this particular demand zone. Yes, I call it my support zone for me. I call it my support zone. When I saw this particular demand zone, when I saw this particular demand zone lying on our psychological level, that's our reaction level, lying on our psychological level, I said, okay, that's a good one. I am supposed to mark the body of this candle only without the wicks, but irrespective, I marked together with the wick because this is actually a huge body candle closure. Huge body candle closure, little wicks. So irrespective, I knew that the body candle closure is going to hold the market. So irrespective, I have two confluences for this trade. Now, three confluence. The first confluence was this my break of structure first. Yes, we have break of structure first. Second confluence was my other block here. And the third confluence was this liquidity that was engineered, because I call this an engineered liquidity, around 12:45 a.m. It was engineered. So after seeing this liquidity and I saw this huge run to the downside, I knew that this particular market is just coming to manipulate people into the market, trap some people before it starts going to its appropriate destination. Because on that particular day, we were bullish in the market as a whole. So what did the market do? Tapped us into this particular market and gave us a 5:1, let's say 6:1 RR, but because of our type stop loss, it's showing 5:1. So we caught a 6:1 RR. So let me repeat my rules. Break of structure rule number 1, other block rule number 2, liquidity rule number 3, and my entry immediately together with my psychological zone confluence. So that means we have five confluences. So that is how we actually rallied that trade from this particular zone to this zone here. So on that particular same trade, we had a break of this particular zone. Can you see? This zone was broken and we were expecting pullbacks. And I always say this thing: when gold is pulling, when we are expecting pullback from gold, we don't expect a lot of pullback. We expect minimal pullback and use that same opportunity to catch another trade. And what happened? The moment I saw that break, I waited for a retest, and the market came, retested this particular break, and it gave us another 5:1 RR. That's how I rallied that trade from this zone to this particular zone. So that is my second trade for Thursday. I didn't take trade on Wednesday. So that is how we actually caught that trade on Thursday. And going to Friday was very interesting for us. Very, very interesting. And we caught some nice trades on Friday.
Is my father. The word father is the word Abba. Is the word.
So irrespective, my confluence for Friday is very interesting. Very, very interesting. So I will be starting from the daily time frame for Friday. I'll be starting from the daily time frame. Why I actually knew that the market was going to be bullish throughout Friday. Sorry for my charts. It's very scattered. So on that same Friday, the first thing I did was to come to the daily time frame. When I came to the daily time frame, the first thing I saw was this particular candle here. This is part of my resistance reasons. This is part of my resistance candle. I call this a resistance candle. The moment I saw this, I marked this as my daily support. I marked it immediately as my daily support. And as you can see here, you see that it's already marked as daily support. This is my daily support here. After getting this particular confluence for this daily, I go to the 4-hour time frame. I go to the 4-hour time frame. When I get to the 4-hour time frame, the first thing I'm looking at is a confluence that actually lies around this my daily support. Immediately, what did I see? I saw a 4-hour OCL. As you can see on the second line, this is the 4-hour OCL. Let me take this 30-minute OCL. This is the 4-hour OCL. Can you see? This is our 4-hour OCL. After seeing this, I have two confluences. I go to the 1-hour time frame again. I go to the 1-hour time frame. On the 1-hour time frame, the 4-hour OCL and the 4-hour OCL is also lying on the 1-hour OCL. Irrespective, I drew my line for the 4-hour OCL, and I actually went a one time frame lower again. Went to my 30 minutes time frame. After that 30 minutes time frame, I saw another OCL for the 30 minutes time frame. For the OCL, this is how I came by with these particular lines, and irrespective, this line gave me confluence that we are actually bullish for this particular day. So that very day, I wasn't looking for sells. The only thing I was looking for was buys. And the third confluence, the fourth confluence also was this my reaction level. Like I said, I will be dropping video of how that trade started for you to have idea of how I actually take those trades.
I'm just doing what I love every day. Like, I don't bother with nobody. You don't know me. You don't know where I done been.
So the first thing I did on the 30 minutes time frame also was to understand, do we have liquidity lying above these particular three levels? Yes, we do. This is our liquidity here. Can you see the market created this liquidity at around 6:30 a.m. 6:30 a.m. After this liquidity was created, what happened? We saw a manipulation into this particular zone. And what I was looking at is entering at the bottom of this my psychological level, and at the same time also looking at body candle closure. I was looking at that if this candle closes with the body candle on this particular psychological level, that means we are not looking for buys anymore, we are looking for sells. But irrespective, if the market comes in, it only just reacts and go back outside the psychological level. So irrespective, after all of that, we saw our clear liquidity on the 30 minutes time frame. What I did was to go to my 5 minutes time frame. That was what I did. After going to my 5 minutes time frame, I saw double engulfing, immediate buys and an immediate sells. So on the 5 minutes time frame, we also have a confluence of an order block. But because of this order block does not have most of our information, most of our rules, we only have just an order block, no liquidity, no pullback. So irrespective, I only use the confluence of this order block and my psychological level, and I kept my buy limit here. The market came in, tapped us in, came back to still retest that same entry before giving us a 3:1 RR. So immediately I saw some kind of reaction here. I went out of the market because of these particular buys that created these sells, and irrespective, the buys actually hold on to the market, brought it down back. So irrespective, I've already taken profit here. So when I saw this reversal, I knew that the market was just coming to test our levels that I draw. It's coming to test. Can you see here? Here it tested the first level. That's our daily support. Tested the first level, gave us reaction. Tested the second level, gave us little reaction, and came for the fourth level, the third level. That is our 30 minutes OCL. Tested our 30 minutes OCL and also tested our psychological level. Immediately I saw this on the 15 minutes. I was on the 15 minutes time frame. I was on the 15 minutes time frame when I saw this.
It's not easy, but through practice and practice and practice, practice makes what? Absolutely not. Dismantle that belief system. Practice makes improvement.
You see, on the 15 minutes time frame, I saw reversal candle. Immediately I saw that reversal candle, I waited for a pullback of this particular candle, and when this candle opened, the moment it came for this pullback, I entered the market immediately. And that was how I actually rallied this trade to this particular zone. That was how I rallied the trade from to this particular zone, and we caught a 4:1 RR. No, 3:3. Let's just say 4:1 RR, and we rallied that trade from this particular zone here to this zone. So that's how we caught this particular trade, and that's the second trade for Friday. We also rallied this particular trade from this zone here, to this particular zone. And irrespective, our illustration of how we expect the market to go played out very, very well, and our bias was correct. That's the most important thing. Our bias was correct. And when we saw, for this particular third trade on Friday, when I saw a break of this level, what I was expecting was a retest of this my psychological level. So that's why I entered this trade again. And irrespective, when the market came, retested this level, gave us little reaction. I was supposed to be on break even immediately, but irrespective, the market came, tapped me out, and resulted to an SL. So that is how we actually finished this week with some nice profit, and we actually caught some nice pips too. So thanks for watching my trade recaps, guys, and I'll see you on the next one. Peace out.